Domestic equities staged a massive late-session recovery today, actively pushing against a wave of global inflation fears. On the intraday Nifty chart, early global shocks force a steep morning trough, immediately followed by a sharp 200-point recovery into the close. Scaling out reveals the primary global headwind looming above that bounce, Brent crude crossing the $110 per barrel threshold. This creates a precarious tug-of-war. Isolated pockets of domestic resilience are fighting a much heavier, risk-off global environment. Today's 200-point rebound remained highly concentrated within a specific pocket of the market. This heat map shows where capital flowed. The banking sector and select heavyweights absorbed the bulk of inflows, carrying outsized weight and lifting the index. Zooming out, broader mid- and small-cap segments stay firmly in the red, lagging far behind.
These broader segments face a specific headwind, price-to-earnings multiples that remain well above long-term averages, creating a friction point between high valuations and a general aversion to risk. Investors are actively hiding in the safety and liquidity of large caps and specific financials, refusing to take on broader market exposure during volatile sessions. Driving that global aversion to risk is the relentless demand and physical cost of energy. When crude spikes, it triggers an immediate domestic chain reaction. It inflates the import bill, drives up consumer prices, and pressures the government's fiscal deficit. This dual-axis chart tracks the damage to currency markets. As Brent crude's trajectory crosses the $110 mark on the left, it forces a corresponding depreciation curve for the Indian rupee on the right. External factors are accelerating the damage. Surging global bond yields are pulling capital away, driving sustained selling by foreign institutional investors. Sustained high energy costs and a weakening currency actively erode corporate profit margins. This leaves today's isolated equity recovery highly vulnerable to broader economic realities. Market focus is already shifting away from daily price swings and toward top-down structural interventions. Traders are looking directly at the Reserve Bank of India and the central government for policy responses to elevated crude prices. This watch list highlights the three criteria dictating near-term direction: crude sustaining above $110, the ongoing trajectory of the rupee, and specific RBI policy actions. Market resilience remains temporary until concrete monetary or fiscal policies are deployed to neutralize the looming inflation threat.